materials or the products. And as we assess that the demand for batteries will just explode over the next decade, it doesn't look very promising at the moment with regards to the circular part of the battery or the fuel cell value chain. And thirdly, we still need quite a lot of innovation and scaling up for this truly to happen. And I hope we can capture some of these aspects also. I will start by asking David, who is heading up the sales and marketing insight at Anglo American Platinum. Where do you see the demand for fuel cell and battery materials, and where does it come from today? And I don't think we should spend too much time discussing the COVID impact, but of course there's been a COVID impact with headwinds. But it's more interesting, I think, to try to look ahead and see, where the headwinds remain, what does the demand side look like at the moment and over the few years, and how do you change as an organization to this demand and your supply side? Floor is yours, David.
Cool. So thanks for the questions, Jürgen. I think they're complicated, right? There's a lot of questions there you can unpack, and that's challenging in its own way. So for us, I think from a platinum group metal perspective, you have to think where we are today, and that's 2/3 of our metals, the platinum group metals that is, go into the automotive sector. So we're producing green metals. They're going there to clean up environmental performance, so clean up exhaust. Clearly, when we talk about green metals in this case, so batteries, fuel cells, we're talking about electrification of the drivetrain, and that's a trend that you can clearly see coming. We've seen it for a while. We see it ongoing. So we see more hybrid vehicles being sold today, and then again in the future, more battery vehicles being sold today, in the future, more fuel cells coming down the track as well. So it's nice to hear the Nikola General Motors mentioned earlier. So for us, there is a clear challenge in that, an established technology is going to lose market share. I think we'll still see a lot of vehicles. I think we'll see an internal combustion vehicle for a long time yet, particularly in hybrids, but probably anyway. And for us, batteries are more of a challenge. We don't see currently a lot of PGM use in there, but we do see a lot in fuel cells. There are some interesting challenges how you deal with that as a company. First up is really understanding it, trying to talk to end users, trying to talk to the OEMs and say, not only what are you doing today, but what are you going to do in 5 years? We can see the growth is coming, but if you can't tell how much is coming, then how do you plan for what you're going to have to produce? How do you plan for the economics of that? And so a big part of that is trying to understand, trying to get those relationships in place early, so that these guys are going to have the metals to be able to do whatever they need to do, whether that's battery materials, whether that's fuel cell materials. To understand, I think you mentioned the challenges of the circular economy. So how are we going to recycle those materials? I think we understand some of that, particularly more so on the fuel cell side, but we don't understand everything yet. So again, how big is that market? When does it come? If you're going to build a facility, when would you build that? Who's going to build that? So I think there are lots of questions there. But for us, we look at it as an opportunity, I think, more than anything else. The platinum group metals are very interesting metals. If you go back to the 1960s, they weren't used in autocats. You didn't clean up a catalytic, you didn't clean up a vehicle exhaust using platinum group metals. That was developed by market development. People demonstrating the technology and getting it adopted. I think we see the same now a little bit about can we get platinum or palladium or whatever into batteries, which is challenging, but maybe possible. And can we get it into fuel cells? Well, it's there. Can we stimulate that demand? And that's a big part of our sort of focus, not only being able to produce the metal and being able to produce it cleanly, but then also being able to make sure that people actually want to use it, that there's an infrastructure there, there's a world that works for fuel cells, so hydrogen and things like that. So that, I don't know if that answers the question in a way. I think the other one that you mentioned, COVID, obviously we talk about the short-term health issues and economic issues and humanitarian issues. The long term, it's not clear what's changed yet. We've had a lot more questions recently about green issues, I think, it's fair to say. And we've seen a lot, say, in France, there's a stimulus package which is about the green economy, and we hear about that elsewhere. but France is really the best example. And $2 billion going towards, I think it's dollars rather than euros, going towards hydrogen and fuel cells in France. So we're beginning to see a size of investment, whether it's the right investment, there's more to be done, but we're beginning to see a size of investment, we're beginning to see a level of interest, the media interest as well in this space. I think you have to differentiate that from reality. Reality in both batteries and fuel cells is still early stage, but the growth potential is there, and I think you have to view that as an opportunity to grow, potentially, and to grow in a sustainable way, which is just as important, I think.
Thank you, David.
Thank you, David.
Was to Andrew Mason. If we zoom in a bit on hydrogen technology and the evolution of battery storage, how would you describe the current situation with regards to the potential? I mean, of course, we see a lot of battery out there and battery technology evolving, but there's still, if you look at the market cap of Tesla and so on, there's a lot of arguments that it's partly due to that there are so few investable large, let's say, targets out there for investors. When do you go into the market or into certain technology? How would you, can we hear some of these perspectives from you?
Sure. Thank you for those questions. So it's interesting that you mentioned Tesla, which had its biggest drop yesterday since it was listed, which was I think it was 21%, knocking 82 billion off its share price. And in August, it actually went up by something like 50 billion or more US dollars. So I suppose that's reflective of there's a lot of steep valuation and volatility in this market. So if we come back to some of David's points, and we think of the battery technology. So what we're looking at are things like lithium, cobalt, zinc, nickel, these different areas, and where's the growth going to be? Now, I think most people will agree that a lot of the battery technology is there, but it's still marginal. And the question is, how fast will it grow? And as well within that, what pieces of technology will grow the most? So I suppose what we're thinking about is demand effect and growth versus tight supply. And what that's likely to do is create that volatility, is to create those price spikes that can be driven by either rapid demand and or a lack of supply to meet that demand. With these price spikes, it does need to stay at a certain level if it's going to meet the constrained supply challenge. So for constrained supply to meet demand growth, if we do see that growth in the battery tech, that's going to be on a 3 to 5 year horizon, we'd imagine, before you can put the money in really to meet that demand. But market tends to find a way. So I suppose that the key things, if we do see the demand, which we think will stretch supply, if that inflated prices as a result of that and a bit of volatility that's there, that will tend to level out, we think, if the price can stay at a reasonable price for a sustained length of time. And from that, what you tend to see is kind of different things coming out. So you meet the demand, you get increased production, and you will get scrappage coming through, and you will also get thrift at the manufacturing end. And with platinum, Dave will have far more expertise here, but I mean the big demand there, around 2008, the prices went crazy, but that's how it played out. You saw the increased production, you saw scrappage, and you also saw thrift. So I think there will be volatility there if the demand continues to grow. And then what we will see are different elements from production right down to the manufacturer that will meet that demand. But in order to meet it, price will need to stay at a certain level for a sustained amount of time.
Thank you, Andrew. Colin, I think I'll just ask a simple question. What are investors asking you? What?
Building efficiencies, where you are going to see some of these new technologies come through. Now, of course, in the metals and mining industry, we're not used to things changing very quickly. We use the same materials for the same things that we used these materials for 100 years ago. So obviously, when technology changes come through, the industry is obviously a little bit slow to react to them. What's interesting, of course, investors want growth. And I mean, Andy mentioned that we've seen this rally in equity markets. It's been driven by the technology stocks. So anything that's a growth.
I like to bring in the participants, the audience, but I think I'll ask David another question to maybe trigger some more questions from the audience. Since you are you're a key operator, you could say, in the fuel cell and the creation of the fuel cell market, and very often we see this market making dilemma,
Scale things up and because these technologies, at the moment there's issues around the cost, and they will only become competitive at scale. And at the same time, it's tricky because it requires collaboration. Maybe I would argue collaboration of a new kind that's not necessarily strong today in the mining and metals industry. And I'd like to hear, what can the industry do to accelerate the transition towards scale up the fuel cell technologies.
Yeah, so I think there are a lot of things you can do in that space, actually. I think the first thing is to understand, I work for what I see as a big company. but we don't have infinite resources. So what we've got to be is intelligent, we've got to be efficient, we've got to be effective. What that means straight off is you're working, I think, in partnership with people. So an example of that would be Anglo American is a member of the Hydrogen Council, which is trying to promote the use of hydrogen and fuel cells as well, but initially hydrogen. And that's a bunch of industrial companies. We can be heard a certain amount, but a bigger group of people is heard more. So getting groups of people together is part of that. Another part of that, and the reason why market intelligence sort of sits in my space as well as sales, is actually we're trying to understand the longer term. I've got a view, everyone else here has got a view, but our customer, car company X, will also have a view. And the ability to talk to them on a day-to-day level, but also get insight into what are they building, not just what are they saying, but what do they really believe, what is their strategy beyond that, is a big part of it. I think the other one actually is something sort of Colin touched on, is in lots of the metals, not so much in our space, but lots of metals, those uses of the metal are 100 years old. Nothing changes. In the PGMs, we understand that the auto catalyst market, which is a huge market for us, did not exist prior to the 1960s. And someone looked at it and said, these metals do something really interesting. We've got a problem here. Can we apply this solution to this problem? And they grew that market and did a whole range of clever things. And the question is, can you do the same here? So we've invested in venture capital to say, can we get some early stage companies across the, I think it's the valley of death, I think it's described as, in terms of funding. Can we get them to a commercial point? Can we be a demonstrator of technology? And we'll be demonstrating a hydrogen system at one of our mines at Macalaquena, hopefully. And so you can look at a whole range of things. But to me, the big thing is that partnership approach, an openness approach, because you have to accept there are challenges, right? This is not all upside. There may be downside. We have to accept that thrifting, which Andrew mentioned, is going to happen, right? That shouldn't be a challenge to us. That's just something that's going to be there. So really that conversation and that partnership thing is, for me, the big thing. And then work out where your bang for your buck is best. Don't spread your money too widely, right? Spread it on things that you think can influence the world.
I think it's an interesting point David's making around.
The
economics are very important, and making things that are going to be practical. Now the challenge is, of course, things are changing on a regular basis. I always like to say commodity markets will self-solve, and price solves everything. So whether it's from an investment side, you're trying to work out where those bottlenecks are, because that's when you will get periods of high pricing, high margins, or whether you're trying to work out where the technology is going for the longer term. And that is something that does need a collaborative approach. Everyone's still learning as we go through these transitions. That's the nature of them. So I think it's important that the collaboration is key in terms of getting everything right. As I say, there's a lot of uncertainties. There's a lot of unknowns. There's a lot in terms of time frame, in terms of scale. You just look at, for example, electric vehicle forecasts and 2025 penetration rates. I can show you examples where people are viewing 2% versus 50%. Now, we're not used to that spread in terms of potential outcomes. So again, there's to me, there's still a lot of education, and there's a lot of simple market intelligence and basic economics to go on in understanding where these industries are going to head.
But Colin, if I stay with you, and I like also to bring Andrew in on this particular, let's say, market making kind of discussion, because policymakers can do their part, the demand side can do their part, but the finance sector, I would argue must do their part also to be, let's say, willing to take maybe a different type of risk than they usually would take, in order to accelerate scaling up. Could you or Andrew maybe comment on that, the role of the finance sector or investor community to banks to also facilitate the market making?
Sure. I mean, so what we're seeing, investors and Andrew can talk to this more, are providing more guidance with what they want to see, and obviously there is never going to be almost we're getting to the point where, particularly in Europe, but it's spreading out globally, there's never going to be a stock that is proposed to go in a portfolio that hasn't been screened for ESG. So that's part of it, and that's still a process where, people are trying to understand, back to the education point I made before. But secondly, in terms of finance, now, We, as banks, of course, are also adapting our model. This is the way the world's changing, and we are partners in this process. What we, of course, are doing are looking at putting money in areas that are going to help and help the companies which we have partnered with over the years to go through this transition and help them as they go along. Business models have to change, and financing is part of that. Just an interesting example from yesterday, we were starting to see differential rates of financing come through for things like low carbon aluminium. I think you'll see a bit more of that. You're seeing the green bond market open up quite a lot, and forward-thinking banks are certainly getting involved in that area. It's not to say that things change, we're going through a quantum leap. This is more of an iterative process, but it's one that's certainly underway, and I think the financial community is an extremely important partner in this transition.
Andrew, would you like to add some comments?
Yeah, so I think the real key here is whether you're investing or trading in the market. And what I mean by that is we are long-term investors. So when we're investing in a company, it's a long horizon. We look to collaborate with the company, and we look to understand what direction they're going to meet these challenges in 5-10 years and further out. Where you can get a lot more volatility is where you've got nearer term trading, where you're just looking at commodity price and you're getting this volatility. So I mean, what we try to do is as much as we can is kind of block out that noise and just understand where a particular company or a sector is going in longer term. And that said, there are certain things that are getting, I mean, the green bond market and ESG, there are certain areas getting driven there, and they maybe lack a bear case. So an example of that would be, you mentioned hydrogen at the start. So hydrogen in relation to steel production. So from an environmental perspective, you might have people that are really pushing this in the near term, but from a kind of longer term and dare I say more realistic perspective, you need to give companies time to transition, particularly if you think of cost in relation to what hydrogen would cost right now in steel production, what would happen with water waste in steel production right now versus the use of coal. But that said, we see that coal is fading, so that's reducing. We know that we're going to need steel production. So what does it mean in the long term? And maybe in the ESG space, that can get lost a little bit because people want that transition to be sooner rather than later. But companies need time to make the transition, particularly in emerging markets we found.
So I'll stay with you for a moment, Andrew, and we can shift discussion a little bit into the ESG space since you mentioned this. So if I ask first, let's say, generic question, how do you stay investable as an industry? I mean, you touched a little bit on it at the moment, and I do think that we see a change from, let's say, the financial investor banking